Please welcome Taran Dhillon from Kula, presenting how RWAs are transforming traditional investment practices. He will delve into the intersection of tokenization and wealth management.
Great. Firstly, thank you, Augustine, and thank you to the STO Summit. Prashant, specifically, I think I'd like to just touch on a few points that you made. I think one thing that Prashant probably did really well was just talk about the foundational blocks of real world assets. I mean, he kind of, you started touching upon the importance of regulation, importance of bringing, the Web2 natives into the Web3 space. Otherwise, the whole infrastructure quite simply isn't going to work. I think one thing that you said, which was quite funny in a sense, but also very true, was the fact that not everything needs to be tokenized. We don't have to, forcefully tokenize everything, and a lot of it comes down to the market reaction of things. So I think, yeah, thank you, Prashant, as well. Just to kind of give your overview the way that you did. So my name's Taran. I'm based out in the UK. I'm the marketing director for Kula. Kula is an blockchain impact investment firm that tokenizes real world assets. I'll get into the nitty gritty and kind of what exactly that is we do, and I'll link that in with how real world assets are truly changing the I think the general investment model, and these traditional investment practices that whether you're a retail investor, whether it's institutional, family office, or sovereign wealth funds, I feel as though the practice is really starting to change. Before I do go into that, one thing that I will say is that with Kula, and I'm sure with most of the projects in the real world asset space, it's been a journey. Kula's been around now for almost 3 years. I think just touching past 3 years. And where if I look back to our white paper three years ago compared to where it is now, as the industry's evolved, as the regulations evolved, as the awareness has evolved, then sorry about that. Then naturally, what's happened is with that, our business model has evolved. And one thing that I will say is that we've seen a lot of growth in the space just over these past 3 years alone. So it's really exciting to see where that's going. I remember a time 3 years ago where we spoke about real world assets and nobody really, it wasn't really a thing. You'd have to, if you mention RWA, you'd have to, break it down and say, these are real world assets, and then somebody would get it. But now, I think now that you're starting to see, people like, for example, BlackRock talking about, the effect of tokenization on the market and the effect that it can have with real world assets, essentially the search volume and I think the customer recognition or the client recognition of it's really taken really taken to point. So Augustine, what I'm going to do is I'm just going to share my screen, and then what I'm going to do is, so what I thought I'd do is I'm going to keep this short, so I won't go over time. I'm aiming to probably wrap up, say in about 10 to 50, about 10 minutes or so. It's more just a case of talking about essentially how you can invest in real world assets, and through the lens of Kula, but then also keeping it quite macro as well. So I don't want to make this whole presentation just about Kula. I'll try and, as much as I can, give a general broad scope of how things are starting to change. So what we realized was, and I'll give a bit of a background of one of the founders, Chris Turner. When at Kula, what we realized was that there's a real gap in the market of whether, if you're investing into something, whether it's, for example, a simple stock and share, there's two kind of, if you like, real big things now that the Web3 community essentially has as an advantage to the Web2 community. One is this sense of active participation. Essentially, investors have an active say on things throughout the whole process. Of course, you can imagine the governance of that kind of goes a lot deeper, but if we keep it very high level, one is the active participation of investors, and the second side is this undeniable transparency that blockchain offers. And so, merging these two together, then you kind of then start to see, okay, well, there is a true need for essentially these real world asset projects that are tokenizing real world assets on the blockchain. From Kula's perspective, and one thing that I will say is that the easiest way I think to understand Kula is to understand it and see it as a bit of a private equity model with a layer of blockchain and a layer of governance. So Kula, what we do is we essentially secure equity in different projects. Let's say, for example, a limestone mine, or more recently, let's say if it's a hydropower plant in Nepal. As the actual project itself becomes profitable, that then goes back into the treasury, which then reflects in token price. Now, how the community side of things come is that we offer at the project level, 20% of profits to go back to the local community. So, for example, if we're operating a gold mine out in Zambia, 20% of those profits of that particular mine are going to go back to the workers. They're going to go back to the local communities, essentially the people that are actually affected by the mines. And that's then how we do positive social impact around the actual asset in which we're investing in. Now, the powerful thing about using blockchain in this case is that if I was to say, to whoever, whether it's Augustine, whether it's somebody else, if I was to say that Kula does that, essentially that's all verifiable by smart contracts. And if anybody does understand, or if anybody doesn't understand a smart contract, it's an automated way of saying that, you don't really have the ability to kind of back out of a transaction. So it's a trustless system. And if you can imagine when you're working in these, if you're working in, I would say, I don't want to say third world countries, but if you're working in areas which aren't as economically developed, you can imagine that the structures around there are very often actually operate on trust. And as an investor, if you're investing now, let's say you're investing, more than 7, 8 figures into a project, let's say a gold mine, let's use another example, it doesn't mean matter to where, but let's say a gold mine in Africa. As an investor, you're going to be quite, if you're saying that a lot of it operates on trust, how do you ensure that it's tight? How can you then take that to a global market? How can you increase the liquidity in the area? How does that then revolve in terms of if you want to IPO it, let's say from a stock perspective, how on earth does that work? So with blockchain, essentially what you're able to do is create a trustless system. And so that's the big need for Kula. So what I'm going to do is I'll go into specific bits about our business model, but I'm going to be jumping around a lot just because I do want to keep this short just to respect in time. So we don't need to go into that. Essentially, one thing that we realized was with investments, we basically find these real world assets through different means, a lot of which can come through our existing community. So that can be through, for example, social media. We actually recently received a project out in Malaysia simply through our regional application form because they wanted to basically explore the idea of one, transparent investment, but two, explore the idea of actually offering a participation protocol to the communities that actually exist around the asset. So one is a case of, can get through social media. Two is a case of we can actually reach out to them. And three is a case of, we can, and I think that's that 4-step approach there. So we can identify, we can regulate, facilitate, and empower. And I think the interesting thing about real world assets, whether it's a water project, whether it's a limestone mine, whether it's a real estate project, it's very hand in hand with the Web2 side of things. So it's very hand in hand with, for example, regulation. It's very hand in hand with operating with governments across the globe. So even though Kula in this case will have its own token, even though it's going to have its own Web3 community, and even though we're going to be doing all the Web3 marketing and all the Web3 the Web3 kind of, the native communication that's involved in Web3. We're also very heavily going to be in the Web2 space as well. As you can imagine, a lot of the real world assets that we are investing into, they don't, these aren't individuals who might not necessarily know about blockchain or crypto, but what they do know about is transparency and governance. So I'll just jump through all this. One thing that I wanted to talk about was this. So one thing that we realized again now, and we're going to bring it back to a case study that we actually were involved in almost over a year ago now. So Kula's one of its first real world asset investment processes was actually in a limestone mine in Zambia. And this limestone mine is a really good, I think, case study to talk about. So it's a case of, again, equity secured in the mine. And as then that limestone mine becomes profitable, the profits essentially flow back into the treasury, which then reflects back into the Kula token price. So Kula's token, imagine if as an investor, what you're basically doing is through one token, you're predisposing yourself to all the different real world assets that's on Kula's books. So one might be a limestone mine, another one might be a gold mine, another one might be a hydropower plant, and another one might be, for example, a timber project. So these are just examples of kind of what's under the hood, but the point being is this is an example now of how a traditional investment model, i.e. a limestone mine, can actually then encourage a really strong social impact. So 20% of the profits, typically from Kula's perspective, does flow back into the community. That community perspective changes DAO to DAO. So that can include, for example, a It can include, for example, a water project, which in this case, I believe was an aquifer of over 35 million liters of water. It could also include, I think it's 350 million liters of water, actually. Um, it could also include, for example, it can, for example, speak, and it can include different, for example, social impact initiatives. It can include economic advancements in areas inclusive of road transportation and support structures. And it could also include direct actual facilitation of, for example, airdropping of currencies or amounts to the local community so that they actually actively participate. And this is actually a photo of a limestone mine. And one thing that we've realized is that now actually what started off as just an investment and injection of capital to secure equity has now actually led to one different investment models. So, for example, in a water project, or two, or even, for example, now open up the doors to government participation as well. So it's powerful one on what's one side, what social impact, positive social impact can provide, and on the second hand, it's quite powerful what active participation and active transparency can bring as well. And so what I'll do is just kind of have a look at this. That's the kind of, if you like, a quick breakdown, and I'm going to show you something else. What we've, again, Kula started off as a means of basically providing a breakdown and providing a means to offer investors a diversified portfolio of real world assets. And those real world assets to begin with started off with natural resources and commodities. But I think, as with anything, as the industry's developed, as Kula's developed, and as our team has developed, we've realized actually that this process can be followed through to pretty much anything, whether it's, for example, tourism, or whether it's UNESCO sites in Nepal, whether it's, for example, seaweed, for a seaweed farm in Panama, or whether it's hydropower plants in Nepal, or whether it's, for example, timber in Malaysia. These are all active conversations and contracts and MOUs that have been signed with Kula. These are all active projects with Kula. And so, as you can imagine, as we head towards our token launch, on one side, there's a lot that's going on underneath the hood. But on the second hand, it's again a testament, I think, to the space. It's a testament to the industry and how much we've actually evolved over these past 3 years as well. One thing that I just wanted to end on is the importance then of how real world assets then actually link with DAOs. So if anybody doesn't know what a DAO is, it's a decentralized autonomous organization. The really interesting and the really powerful thing with real world assets on the blockchain is that if you were to operate a DAO, i.e., a decentralized autonomous organization, all of a sudden you have investors now who are actively engaged. So these are not just, idle investors. These are people who essentially are actually going to bring you projects. The people who might even, for example, participate in the marketing of your project, or participate in the governance, or participate in the direction of your project. Now, as you can imagine, I'm not going to use any case examples, but there are DAOs that have been done good things, and there's DAOs that just simply haven't worked because they haven't had an effective governance protocol. So with Kula's model, there was quite a few, I'd say, roadblocks that we've now overcome. One was, how on earth do you regulate a DAO? That's one. The second thing is, how do you regulate a DAO that's involved in real world assets? That's two. The third thing was, Kula actually operates a double DAO. So at the Kula token level, we have one Kula DAO, and that's the DAO that's going to be responsible for, marketing decisions, be responsible for team decisions, be responsible for anything linked directly to the token. And we then have sub-DAOs, which other projects call it, but we call them regional DAOs. Essentially, lots of different DAOs under one umbrella DAO. And it's this umbrella DAO, Kula, which investors, like, say, for example, myself, can invest in. And the reason we do that is quite powerful. And I'll use an example of myself, and I'll use an example of, a fictional character called Bob, who's based out in the States. So, and I think this is now what I'm probably going to end on. And I think the reason that they're going to talk about and probably end on this is just because of this will show, and I think it will quite neatly tie in together how, you have the regulatory side of real world assets, how that plays a part, how the tokenization side of things play a part, how the active participation, how the DAO side plays a part. And, I think the future of real world assets will probably be showed in this statement alone. So For me as an investor, if I was to invest into Kula's token, essentially I can be part of marketing decisions. So let's say if there's a protocol that's just been put up, or there's a proposal that's just been put up to say that, hey, should Kula spend say $50,000 on the STO summit as an example? Should Kula spend that? That's not a decision which should be made at a regional level. So that's not a decision that should be made at the level of a limestone mine or anything like that. It should be made by the investors and the core team. So anybody holding Kula's token will be able to make a decision or be able to participate in the decision process of that. And so they'll be able to actually have an active stake in whether or not Kula invests into the STO summit in that particular example. Now, let's get nitty gritty. Let's say you have a limestone mine, or let's say you have a real estate project out in America, and you have this real estate project, and what's happening with this real estate project is at 6 p.m. every evening, you have these large trucks which keep coming in and keep annoying all the residents. As an example, it could be absolutely anything, and I'm sure this example you can imagine it could be extrapolated to so many different things. Now, what will happen is that at a regional level, called a regional DAO, that will then have its own voting and it will have its own proposal making mechanism. The reason that's important to separate it as a double DAO structure is because me as an investor shouldn't be participating, nor should I be voting on that particular regional level voting procedure. But then equally, the residents who will be voting in America, they shouldn't be voting on Kula marketing decisions either, unless they're token holders. So you can see quite clearly how that double DAO distinguishes, not only just the voting procedure, but also the equity share and the fair breakdown of that. That's a really powerful tool on how DAOs can operate, and then how that then ties in with regulation is even more interesting. I think it's an area which is currently evolving. It's an area which has evolved absolutely dramatically in the past 3 years. Kula is currently pursuing regulation, and things are looking, I'd say they're looking very positive. And again, bringing it back to the previous panelist or the previous discussion that was had, I think I'll just tie up on one thing. I think for real world assets to work, we need regulatory clearance and clarity. I think there's a lot of projects that want to do well and mean to do well. I think at the pace of which crypto is moving, I think it's therefore quite difficult sometimes to have that regulatory clearance and clarity. So that's something which I think it comes hand in hand with how well the market actually takes to real world assets, and essentially reducing all the friction points, as you can imagine, that are involved in investment processes. On the second hand, I think that as people now become more savvy in crypto, just generally now, just more of a broader perspective, I think before it was always just about crypto being this thing of where you can make lots of money. It wasn't necessarily ever seen as like a stable term or a stable method of investment, like say, for example, the S&P 500 or the FTSE 100 or whatever you want to compare to. It wasn't necessarily seen as that. However, now people are starting to see the general, if you look at just, for example, the Bitcoin dominance alone, people are starting to see and diversify now into Bitcoin as a means of a stable investment. You've started to see ETFs come about. You've started to see sovereign wealth funds. You've started to see family offices now all diversified into crypto. And what's interesting is, again, it's more a case of at the minute into Bitcoin. And what happens when you start to have money or liquidity then start rotating around the market? Let's say, for example, you go from Bitcoin to the altcoins, and then you go altcoins into specific categories. I think that's where things can get quite exciting. I think people are going to, what I've started to see actually in the market is that people are starting to really see now the utility that real world assets have to offer. And essentially they're realizing that these are real use cases. These are, teams which are not just, they don't, and there's a space for meme coins, right? But these aren't just teams which have got, different JPEGs and NFTs as their display pictures. These are real individuals with real companies behind them and real regulatory clearance behind them that are now coming over to the crypto side. So I think with that will come further innovation. It will come further clarity for the market. And I think that, as we have seen in the past 3 years from Kula, where Kula started 3 years ago is very different to where it is now. And I'm sure over the next 3 years or even 5 years, it's going to change even more. So I'd just like to thank everyone for their time. And Agustin, if I could pass it over to you, and just like to thank you for inviting both myself on behalf of Kula to speak at the summit today.